Now, this trading strategy involves trading with the trend. Remember, you have to trade with the trend. I will show you the exact set of rules you should use with this strategy to scalp in the financial market. This scalping strategy has been backtested and proven to produce consistent and profitable results over a long period of time. It works with all markets and tradable assets and must be used according to the rules that I am going to show you guys in this video. Now, most importantly, what you have to do is that you have to try and use this strategy based on the scalping time frames, which are the lower time frames, the intraday time frames. That is because this is a scalping strategy. However, this strategy can also be applied for day trading, swing trading, and also position trading. Now, the biggest struggle I see with traders is that they want to buy when the market is at its lowest point and they want to sell when the market is at its highest point, which is why most of the traders get really frustrating results. I know it would be a great thing to pick the highs and pick the lows, but that is really very unlikely to happen consistently in the market. If you check out my channel, I have always emphasized trading with the best risk to reward ratios and letting the probabilities play out in your favor. And also, I emphasize trading during trending markets for better results. Also taking into consideration the direction of the market and direction of the trend, so you can trade with the trend and not against it. All right, now let's jump into the strategy and I'll dissect it for you now, guys. So rule number one, guys, we will always only trade with the direction of the trend. Okay, we only trade the direction of the trend. So I know most of you guys will ask and say, all right, you're saying we trade with direction of the trend, so how do I know whether the market is trending or not? Well, just go on to your trading view. Like right now, we're here on trading view. Okay, just head over to indicators, right? And then on indicators here, just go to the search bar and search for moving average. Here I have already put an exponential moving average as a favorite, so I'll just go over to this moving average and I want to edit it now and make it change the length to 200. Okay, change the length to 200, and then you can also change the color. Let me change the color of this to yellow or white so that you can see it clearly, and then make it a bit thicker. All right, so here we have the 200 period moving average. This is how you know the trend, by using the moving average. You also need to support the moving average by identifying higher highs and higher lows in the market. So for example, here we have the moving average being above the price right here, and then price is showing that it is moving in a downtrend. But you also need to identify that the market is creating a trend to the downside. All right, you need to identify that the market is actually creating a trend by identifying a high, a low, a high, a lower low, a lower high, like that. Okay, let's change this to white. Right, so you need to support the moving average by making sure that the price is creating lower highs, lower lows, lower highs, lower lows, and then when the price goes and breaks below the moving average here, you can now be sure that the trend is headed to the downside. Okay, after you have identified that, we will now only enter the trade when these have been fulfilled. All right, so the first rule is you always want to trade in the direction of the trend. You only trade during a trending market. We will only enter a trade if the price is creating like lower lows and lower highs, lower lows and lower highs for a downtrend, and higher highs, higher lows for an uptrend. Okay, and the price is below or above the moving average. Right, so the second rule that we have to consider is we only have to trade during the London and New York sessions. Now here I have a sessions indicator. You can just go back to indicators right here, and then you search for sessions. This one by Lux Algo, put it on your chart. Then you'll have an indicator like this one on the chart. So you only want to trade during London, which is the gray box, and then the orange box is the New York session. Don't trade outside of this sessions, right? So you only want to trade that. That is rule number 2, right? So rule number 3 that we have to always consider before taking any trade is we will only enter when there is a strong momentum in the market, which can be represented by an engulfing candle, either bullish or bearish, depending on which direction you're looking to take the trade in, and the previous candle is the opposite candle to the engulfing candle. For example, if you're going in for a sell, you're only looking to enter if there is a bearish engulfing which engulfs the previous candle, which should be bullish. All right, so in that case, for example, we are looking at this area here. All right, so this candle here is basically, yes, you would call this is not a very clear engulfing, but it is an engulfing candle. Okay, it is an engulfing candle. So you want to take a trade here when this candle here is bigger than this previous candle, and the previous candle is the opposite candle. All right, let's look for a better example. Like now here, you see this area here. This red candle is an engulfing candle, a bigger candle than the previous candle, and the previous candle is the opposite candle to this one, which means this is a bullish candle and this engulfing is a bearish candle. So that confirms the third rule. A fourth rule is we will set our stop loss below the previous opposite candle and target a 1:2 risk to reward ratio. So here, remember, we are trading this on the 5-minute chart. It is also part of the rule. You trade it on the lower time frames, 5 minutes chart or 15 minutes and below. So here we have an engulfing candle. We come to here and we place our trade at the close of that candle, and the fourth rule says we put our stop loss at the high or low depending on where you're trading from. Like in this example, the stop loss at the high of the previous opposite candle, which is this bullish candle here. So we put our stop loss above that bullish candle's high. Let me zoom in so that you guys can see. See this green candle? Your stop loss has to be above that high, okay? And then you have to target a 1:2 here. We have a 1:2 right here. So you can see that this trade goes straight to take profit. So those are the rules that you have to follow to enter this trade. This setup may not happen every single day, but believe me, if you follow these rules, you will barely get stopped out of any trades because you will be fulfilling these rules. Okay, so you can see here, if you go back still and look for the sell entries here, we are creating lower lows and lower highs, which confirms that the trend is moving down. So here we have a low, we have a high, we have a low, we have a lower high, then we have a lower low here, a lower high, okay, and a lower low. So you can see that the market is creating now a downtrend and the price is below the 200 period moving average. And what else do you see? You see now a bearish engulfing, which engulfs this previous green candle. So what do? You place your entry at that candle's close, place your stop loss above this green candle. Let me show you. Let me just zoom in so that you guys can see clearly. You see here, place your stop loss above this green candle and then you target a 1:2 like this, and you would still get this trade. This does not happen every single day, but whenever it happens, it will give you a good profit. You can go and backtest this as well. You'll be able to see. Even here, you had an entry. You'd enter here, this candle, and then your stop loss above that green candle, and then you'd have your 1:2 right there. So you can come in every day and trade this. You can have multiple entries. Like here, we had another entry which would have actually gone into a profit. All right, so you see here we also had an entry which would have given us a win. So you can actually scalp the market using this strategy and you guys will be amazed. Remember, don't force anything to happen. Just trade when all those conditions have been met. Like for example, here we have the market creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, that condition is fulfilled. The market is above the 200 period moving average, showing that it's an uptrend. And then we are in the London session here. So we get a very good bullish engulfing, which engulfs this previous. Let me show you that area. I want you guys to really get this. I know this strategy is going to really make you guys profitable. It's the last strategy you need to be profitable. You see this candle, you would place your buy at its close during London session and your stop loss below the previous red candle, and then you're targeting a 1:2 just like that. Okay, so guys, that is the strategy. Go back test it, go try it out. It will bless your life, it will make you profitable. If you found value with the video, leave a like, subscribe, and also comment down below, guys. It goes a long way to show your support for me, and I really appreciate that. Have any questions, drop them in the comment section down below. And also guys, I have opened up a membership for my channel. Go check out the membership packs that I have created for you guys. Really beneficial at low cost monthly. Thank you guys and see you over there.